Today we would be analyzing the results of State Bank of India. The results were out on 8 October. Income. Now let's have a look at the investor presentation. Credit growth is at 14.93% YOY at 39.21 lakh crore. Asset quality, credit cost at 0.38%, slippage ratio at 0.51%, which is a very good number. Retail personal slippage ratio at 0.31%. So bank is doing well on the asset quality front. PCR stands at 75.66% and net NPA is at 20,294 crore. The net profit of the bank stands at 18,330 crores, ROA at 1.13%, ROE at 21.78%. Whole bank NIM stands at 3.18%. It is in a declining trend, which is a worry for the bank. The bank total non-NPA provision stands at 31,084 crore, which are 153% of the net NPAs, which is around 20,000 crore. So the bank holds a provision of 31,084 crores, which it can use in time of need. So this is a very good thing. Now let's have a look at the key indicators. The net interest income has shown a year-on-year growth of 5.37%. The NIMs have declined. Net profit of the bank has increased by around 28% to 18,331 crores. Net NPA has decreased and PCR has increased. Capital adequacy ratio has decreased slightly. The bank advances have increased by 14.93% and deposits have increased by 9.13%. So the deposits somehow have to catch up with the advances. The share of domestic advances, retail got 43.11% a year back. Now it stands at 42%, and corporate loans have increased to 34.72% of the loan book compared to 33.9%. These are the bifurcations of the loan given in various sectors. Uh, So home loan has shown a year-on-year growth of 13.66%. Auto loan has shown a year-on-year growth of 11.97%. And personal gold loan have shown a growth of around 29%. CASA deposits of the bank was 41.88. It now stands at 40.03. So the CASA deposits have reduced. The bank branches have gone up to around 22,640 branches, and saving account balance has gone from 16.7 trillion rupees to 16.9 trillion rupees. Number of saving account opened daily is around 65,000, which is an impressive figure. Net interest income. So we can see that the net interest margin has been in a downward trend and is now at 3.18%. The bank needs to work on it. Yield on investment has gone up from 7.2% to 7.21% in September quarter. Yield on advances were now stands at 8.87%. Meanwhile, cost of deposit is at 5.03%. So the numbers are fairly reasonable other than the net interest margin. Yield on investment on treasury operations was at 6.9% a year back. It now stands at 7.21%. Cost to income ratio. So the cost to income ratio of the bank has reduced to 48.94 in the half yearly compared to 55.66. The bank had spent in FY24 significant money on the employees. We would see that later. The profit per employee has increased to 30.07 lakhs from 26.2 lakhs in FY24. The business per employee now stands at 36 crores, which was 34 crores in FY24. Total number of employees in the bank is at 2.34 lakhs. So the profit per employee and business per employee have shown a upward trend, which is a good sign. Credit growth of the bank stands at 14.9%. ROE is at 21.8%. PCR of the bank is at 75.66%. Non-NPA provisions are 31,000 crore. Net NPA is 20,000 crore, so it is around 150% of net NPA. We have discussed ROE and ROA. They are in an upward trend and everything looks fine here. At the financials, net interest income has been flat. The operating profit now stands at 29,000 crore versus 26,000 crore, mainly driven by other income. It was 19,417 crore a year back. This number was low due to high employee expenses. The net profit of the bank is at 18,330 crore versus 17,035 crores versus 14,000 crore. The cost to income ratio of the bank has improved considerably. It now stands at 48.51 versus 49.42 Q on Q and 61.39 YOY. The NIMs of the bank have shown a declining trend. So total interest expenditure of the bank is at 72,000 crore, which was 70,400 crore a quarter back and 61,879 crore a year back. This was the number I was talking about. The provisions for employees, it is at 2,906 crore in this quarter compared to 3,499 crore in the last quarter. But look at Q2 FY24, it stood at 9,200 crore, and that is the reason why the operating profit in Q2 FY24 was quite down. The loan loss of the bank stood at 3,600 crores versus 4,500 crores Q on Q and 1,815 crores YOY. The CAR of the bank stands at 13.76 versus 13.86 Q on Q and 14.28 YOY. The minimum range required is 12.1. Now let's have a look at the asset quality of the bank. The gross NPA stood at 86,970 crore. It is now at 83,369 crore. It is in a declining trajectory, which is a good thing for the bank. Net NPA stands at 20,294 crore as discussed earlier. In September 24, there is a slippage ratio of 0.68. It was 0.84 in June quarter. This page also goes further into the asset quality of the bank. Uh, I would talk about the Q2 FY25 asset quality. See, the closing level of gross NPA in Q1 FY25 was 84,200 crores. Fresh slippages were less, which stands at 4,800 crore, and total reductions were 5,800 crores. So, fresh slippages minus total reductions would be the net increase, which is minus 857. And so the closing level of gross NPA is 83,369 crores. That is why the percentage GNPA has decreased. Segmental NPAs, agri sector is still experiencing stress with NPAs around 9.44%. I think bank must have done provisions for it. This is an important graph. The fresh slippages now stands at 4,870 crore versus 7,900 crore a quarter back. So the fresh slippages have decreased, which is a good thing. But the issue is here. The SMA-1 loans of the bank have increased by around 9,000 crore Q on Q. Those who are unfamiliar, SMA-1 loan means the loan which has not been returned for a period between 30 to 60 days and has a chance of going into the NPAs. So we can see that uh, a fund based outstanding of 9,000 crores has been included in SMA-1 as on September 24. So this is a reason to worry because if it goes into the NPA, ultimately it will affect the profitability of the bank. Now I would summarize some important data for the bank. The net profit stands at 18,331 crore. Operating profit is at 29,294 crore. ROA at 1.13%. ROE at 21.78%. Net interest income increased by 5.37% year on year. Whole bank NIMs stand at 3.18% for the half year and 3.1 4% for the Q2 FY25. Credit growth of the bank 14.93% year on year. Domestic advances 15.55% year on year. SME and retail personal advances have shown a growth of 17.36 and 12.32%. Asset quality, gross NPA at 2.13%, improved by 42 BPS. Net NPA at 0.53%, improved by 11 BPS. PCR stands at 92.21% and including AUCA, and 75.66% without including AUCA. Slippage ratio has improved and now stands at 0.51%. Credit cost of the bank stands at 0.38%. Apart from this, I would like to mention that the price to book of the bank stands at 2.09 after considering the Q2 FY25 results. And deposit growth guidance of the bank for current financial year, according to management, is at 10 to 11%. Credit growth guidance is between 14 to 16%. If you like the video, do share and subscribe. Also, let me know which other share would you want to discuss.